Good afternoon. My name is Jennifer Parrish. I'll be doing an introduction to life insurance and health insurance today. Insurance contracts are legal principles. One of the first principles I'm going to talk about is principle of indemnity. The insurance company will only pay 100% or less of your financial loss. Essentially, they don't want you to, or you really shouldn't make a profit off of any type of insurance, let alone health insurance. For example, talking about car insurance, is you purchase a vehicle for 18,000. 2 to 3 years down the line, it's total, so it's the insurance company says it's worth 12,500. Your deductible is 1,000. So as you see, I did the math for you. 12,500 minus 1,000, they'll give you 11,500 for your vehicle, even though you paid 18,000 for it. The depreciation and what it's actually worth at that time is only $11,500. Another part of insurance contract principles is the principle of insurable interest. And essentially that means is, again, you cannot make a profit off of something you have no interest in, or if you haven't suffered a loss. So you can't put a claim out on a damaged or car in any way when there's not an actual loss of value or anything of that nature to that car. One of the examples I gave is an abandoned building is owned by a friend. So you decide to purchase property insurance, and 2 months later down the line, that building burns down. Well, yes, it is your friend's building and you purchased insurance on it, but you have no interest in that building. So, no, you cannot gain anything from that insurance because you have no interest. So, essentially, that's kind of like a waste of time or a waste of money in a sense. Um, and insurance companies look at all that. Insurance contracts, legal principles of utmost good faith. This particular principle is, to be honest, from both parties. The insured, the insurer, the true age, gender, occupation, marital status, family medical history is the representation of yourself. When you go through the insurance process of putting in the application, they ask you questions and you want to be as honest as you can. When it comes to property insurance, if they ask you to put in a new floor, new windows, things of that nature, and you promise to do that based on the premium, that is something that has to be done. And if you don't, there are consequences to where, an example, you promised to lay a new floor, you didn't, someone gets hurt, the floor caves in, the contract can be voided or no payment out for the claim. Is, we have things that we have to go by when it comes to insurances. The principles are what keeps us safe and the people around us as well. Concealment is silent about facts. If you know you skydive 2, 3 times a month or every other weekend, you can't say, well, I don't do anything that endangers myself in the insurance process of the application, because you intentionally lied in knowing that you do such things. That's one of the examples that I laid out. Unique legal characteristics of insurance contracts. Some people may or may not know this. Adhesion and alterary, sorry. Adhesion, take it or leave it, no negotiation. You fill out the application, they go through your medical history, they come back and say, okay, this is what you'll have to pay a month for a premium. If you don't pay it, unfortunately, or if you don't accept it, it's as is. The one good thing about that is the state commissioner of insurance must approve all products. So, it does have to go through someone who says, you know what, this isn't right. there's no equal exchange when it comes to life insurance. And I can buy a life insurance policy and live to be 85 and not pay out on it. But at the same time, as much as I've been paying, it won't add up to the face value. Or it can be the total opposite. I can get a life insurance policy in the next 2 years. Something happens to me and my family, or the heirs beneficiary will benefit from that, even though I have not paid much into it. So there's never really an equal exchange when it comes to, especially life insurance. Unilateral, conditional, and personal are other characteristics of life insurance. Unilateral is basically one promise. The beneficiary will get paid in the event of a covered loss. That is a promise. There's no ifs, ands, or buts about that. The conditional, you cannot break the rules. You must abide by all the terms and conditions of a contract. Goes back to saying you can't say that you don't skydive and you do. And personal, it is no third party without the consent of the insurer. Excuse me, there is no, oh, well, I want to have my cousin insured for me, or aunt, uncle, anything of that nature, mom. No, it's insured and insurer. That is. Now we're going to talk a little bit about health insurance. What do you know about health insurance? The Affordable Care Act was put into place in 2010, and it basically mandates for everyone to have some form of essential minimum health care insurance. For large employers, they have to offer health care insurance if they have 50 or more employees throughout the year. And if they don't, it's a tax penalty, and that's for anyone who does not even carry health insurance. Smaller employers have a little bit of leeway. 50 employees or less during the time of the year, they're still encouraged to offer the minimum level of health insurance. And the benefit of that is they try to give them a tax credit, or they will give them a tax credit if they offer it to them. Individuals who do not work for an employer and they are self-employed still are required to get health insurance. It's just in the private market or government. But there are some people who work for other employers or self-employed who are actually exempt from getting health. Exempt individuals vary. You have religious beliefs, members of a healthcare sharing ministry, those who are incarcerated, non-citizens, individuals without affordable coverage, members of Indian tribes, household income below filing threshold. If you just really don't make enough money, you are exempt. And individuals with hardship certification, in which you have to go through a process to group health insurance for working adults. Group health insurance is really good. The premiums are reasonable. You don't have to get a physical, and you don't have to get proof of insurability. Um, I remember I worked for a company and they offer health insurance for me. Because I have 4 children, it wasn't necessarily affordable for me, but a lot of my coworkers, they were happy with it. I mean, there were low premiums, the co-pays were not high, so they really enjoyed that. And the good thing is the eligibility is individuals who are affiliated with a particular group, and and they can be covered by the group. Typically, they're full-time employees. And the qualifying part is basically you work for a company and the company pays for that particular health insurance for their employees. Non-employer groups also provide their members with health insurance, and that goes for the Bar Association, the Chamber of Commerce, labor unions are a few examples. Group insurance features. There's no underwriting, individual underwriting proof of insurability is not required. And it goes by the type of work and the average age, and typically enrolls all eligible employees to the plan and pays some premium coverage. The type of group insurance, you have the basic, major, and comprehensive. Basic covers really the basic hospital, physicians, surgical bills, typically low policy limits, often combined with major insurance to meet the requirements of the minimum essentials of the ACA, which is the Affordable Care Act. The major medical insurance covers the same thing, but it's also known as a supplemental, and it's a wider array than the basic, so you get more. Yes, the premiums coverage may be a little bit more, but you're increasing your maximum for the policy. The comprehensive is a combination of both. It has lower deductibles, co-payments, and the co-insurance 80/20. With that, the co-insurance actually can be 80/20, but it can be 60/40, 90/10. It all depends on your affordability. Individuals that need health coverage, the difference is when you're self-employed, you will have a higher premiums than a group, and the self-pay premium is 100%. You don't have anyone putting a little bit more money in for you to pay less, because you essentially work for yourself. And your eligibility is you work for yourself. The past individuals with pre-existing conditions did have a problem before, but due to the 2010 healthcare legislation, it prohibits that. So any policies that were established after 2013, you were pretty much okay. The types of individual policies, you have major medical insurance and medical expense insurance. And if you look at both of them, and essentially they cover hospital, physicians, surgeons, medications, durable equipment. You wanted to look into all this when it comes to the different type of insurance for individuals, because it is going to be up to you of what you need. Types of group and individual plans: indemnity health insurance and managed care insurance. The indemnity health insurance is known as a traditional health insurance, offer a wide range of practitioners. There's not a limit to a service of network, flexible insurance policies, high premiums, the deductibles with no co-pays, and co-insurance for major medical. Managed care insurance, that one is just as it's managed. You're restricted to the healthcare providers, require pre-approvals, and prohibits the physicians from offering you an alternative. And when you look at that, it could be a good thing or a bad thing. You have to really take that into consideration. Health insurance coverage, HMOs, PPOs, and POS. Many of us may or may not have heard of health maintenance organizations, HMOs. They're a group of physicians who basically want to combat against the rise of health insurance. They have fixed fees, low co-payments, but there are restrictions. As a patient, you can only see the physicians within that HMO circle. The PPOs, on the other hand, it is a organization of the insurance company and the physicians. They offer discount health care. Members may receive a higher deductible if they go outside of the network, but you have that option. And that's one of the major disadvantages. The out-of-network co-payments are a little bit more expensive, but you have options. The point of service plan, the POS, is a hybrid mix between both. It encourages you to have a primary care physician. And they actually can give you a referral to go see outside doctors. And the disadvantage again is the higher deductible outside that circle that they have, which is considered out of network, and you will have increased costs. Health savings accounts is something that's really big with companies now that is offered. It's available to individuals and employers. They give you tax advantages, deductibles, and it gives you kind of the increase in your income with that tax advantage. You can carry over unused funds, which is a good thing, and the high deductibles and annual fees is one of the biggest disadvantages. The flexible spending accounts are really good, along with the HSA accounts. Essentially, you can set money aside pre-tax to pay for your co-payments, your over-the-counter excuse me, medications. You use it or lose it, in a sense, to where after the year ends, within 2 months, if you don't use it, you actually lose it. And then limit is $2,650, and that's since 2018. We're going to talk insurance. And one of the things I always ask people when it comes to life insurance, what is it that you want to leave for your family while after you pass? And a good start of a conversation is, what is the purpose of life insurance? You want to kind of eliminate some of the burden from your family, because final expenses of a burial can be very stressful when it comes to caskets, flowers, and these things cost money. So without life insurance, how do you expect your family to pay for things? If you have children or grandchildren, you want to be able to leave some money for them so that they can go ahead and go to college. And you want your family to be able to live comfortably, especially if you are the breadwinner, to paying off the car, the mortgage, to have that financial freedom, because this is going to be a stressful time. Your significant other, your spouse, you want to maybe leave something for them to where they can retire early, or when they do decide to retire, whenever that time may be, it is do it. Life insurance needs the human life value approach. This is one of the difficult ones I've seen to examine how much you may need as far as for life insurance. It breaks down your annual income, your taxes, your work life expectancy. You have to calculate the lost earnings of the family and the present value and things of that nature. The life insurance needs approach is a little different. It estimates the needs of your family you will require after death, final expenses, eliminating debt, adjustment period. An adjustment period is really important, because people mourn differently. And it takes time. It could be 6 months to a year to 2 years, 3 years. And you want to have that financial stability still there for them within 6 months to 2 years. Dependency period, which is also known as the blackout period, and that is essentially if you have children at their age of your passing to the age of majority, which a lot of times is 18 years old. The life insurance needs capitalized earning approach is one of the basic ones. It's similar to the human life approach, removing work life expectancy and investments. The method divides net earnings, less taxes and consumptions by the inflation. I kind of gave you an example here, numerator, denominator, the earnings, and I kind of broke it down for you. So essentially in this particular example, that is not necessarily a lot of money, but it is a lot of money as far as that financial stability. And sometimes we don't understand things until we see it within the numbers, the breakdown of it. The types and uses of life insurance, we may know of term, universal life insurance, whole life insurance, they all essentially have that death protection, but there are stipulations for each one. The term is basically a term: 1 year, 2 year, 10 years, 15 years, 20 years. This is good depending on your life situation. Being younger, may not be able to have that much financially to um, give within insurance, but it's something available that can be adjusted for you. You have the universal life. This one is similar to the whole. It does earn cash value accumulation. The death benefit is there. They have different cash options. Individuals have a temporary need for life insurance. This particular one right here, temporary need, I'm not sure of, because life insurance is essential. Whole life insurance is a little bit more expensive, and it goes along the line of, if you're a little bit older, yes, it'll be expensive, but you'll have a little bit settling of what you may actually need. Of course, the increase in premiums, I've already said, it's a guarantee, and it does earn value, so you can kind of cash out on that, and it's a permanent policy price, and it doesn't change. The types and uses of life insurance: variable life insurance, group and term life insurance. Variable structure is set up like universal. The major difference is the owner of the policy can direct the way they want the money to be invested. Group term is obtained during when you're employed. Some employers offer it, and it's really inexpensive, very cost effective, eligible to all employees. And if you are an employee and your job offers it, that will be something I would say definitely look into. The common life insurance contract provisions: the grace periods. If you cannot pay, your premium is overdue, you have a grace period, to where if you don't pay within that time, they may or may not allow you to reinstate. The inconsistent ability, inconsistability. Usually within 2 years, you have within that time to um, okay, look at your insurance and say it was a misreputation, an omission, or things of that nature, and it can adjust. Um, the insurer at that time can modify the benefits after the 2 years to what they see fit. The misstatement of age and gender have to be correct. If you say that you're 28 and you're really 38 at the time of your loss, something happens to you and your age is revealed, they will go back and adjust the premium, not the premium, I'm sorry, the face value of that age that you're supposed to be, or should have been, I should say, at that time. So they will calculate 38 years old. This is what the face value is. More common life insurance contract policy provisions: the suicide clause. A lot of times there cannot be a suicide fatality within 2 years. They will not pay on the face value of the policy. They will return your premiums. Reinstatement is just similar to the grace period. If after the grace period is over and you have not done the things that you needed to do for reinstatement, you may have to have your premiums increase. And that's if you do things as you're supposed to, in the sense of the reinstatement requirements. The policy loan provisions: this is with whole life insurance and the universal. As you're earning interest, you can receive a loan up to 90%. It's a low rate, and there's really no tax consequences as long as there's no modified endowment on that contract. Essentially, my conclusion is this: don't hesitate to talk about life insurance, health insurance. Um, this is something that is essential that you need to talk about. Know your worth to support your family in death as you did while you were here. And if sometimes you couldn't do it while you were here, to leave that to your family to help them through this time of need is very good. Um, Again, remember to support your family in death as you did in life, and sometimes even more. And one of the biggest things I always say is ask questions, ask questions, ask questions. If you don't understand, ask a question, and maybe it can be interpreted a way that you may understand. And you may have to ask different people to get a true understanding of what life and health insurance can do for you and your family. Thank you for your time. Have a great evening.